Snipers, you have to see what's happening to the Bitcoin price on turnaround Tuesday. Bitcoin maintaining price action above 35,000 US dollars, 34,780 being the major support level. Today we have more important puzzle pieces than we've ever had here on the Snipers channel, with the volatility index showing a potential bottom for the S&P 500 right now. Institutional volume coming in not just for Bitcoin on the 6-hour chart, but on the daily chart, and not just for Bitcoin. ARK's innovation ETF and the S&P 500 also seeing institutional volume that we have not seen since March of 2020. This is a huge day for Bitcoin. We have a lot to look at on the micro time frames as well. Let's just dive straight into this potential target for Bitcoin in the immediate short term. Notice how on this hourly chart, we have this potential inverse head and shoulder pattern forming here with a neckline being tested as we speak. Bitcoin inside of the range of 34,788 and 38,000, of course, 36,500 being the midpoint of the range, also a very important level. If we were to take the market structure and look at a potential target, if we were to break out from this inverse head and shoulder pattern, notice how there's confluence here with a target of 41,950. If we see follow through with this inverse head and shoulder pattern, are we going to be seeing this move to the upside? Well, look at these puzzle pieces that we're going to talk about today. More important than ever, this is probably the most important video that I have made in a very long time. One thing that we're going to talk about is what's happening to Ethereum right now, because we're seeing a little bit of a different storyline with Ethereum. It's affecting Bitcoin dominance, and it could potentially even affect all of the other altcoins in this market. We're going to look at this in just a second, but I want you guys to realize this. The S&P 500 and Bitcoin are the most correlated assets that Bitcoin pretty much follows. And right now, what we're seeing in the S&P 500 is something that we haven't seen since March of 2020. And that's the fact that we are seeing volume like we've never seen before. Look at this institutional volume on the daily chart for the S&P 500. You can even see it better on the ARK Innovation ETF. This is Cathie Wood's leading ETF. Look at this volume that we have never seen before. Notice how many people bought the dip here, even on the weekly chart, coming down to the 200-week moving average for the first time since March of 2020. We are now potentially going to see a bottom here. And why is this important? Well, Cathie Wood's a big advocate of Bitcoin, talking about how tech is currently in deep value territory. Is this the bottom, not just for Bitcoin, but also for the ARK Innovation ETF, the S&P 500? Are people buying the dip? Here's a great way to predict that. It's called the VIX, the volatility index. It measures the volatility in traditional markets. Look what we have here. Nobody is talking about this, but on the daily chart, if we were to look at the VIX, we know the Feds are in full control of the amount of stimulus moving into this market, and they want a controlled VIX, right? The point of the Feds is to control the price action of the VIX. Look at this. We have potentially found the most amount of volatility in the immediate short term, hitting a major resistance level that has not one, not two, not three, but now 4 points of contact. Every time we've come up here, we've seen the S&P 500 bottom out, right? And so this is a huge puzzle piece. The VIX hitting a major resistance right now could potentially indicate that we've seen a bottom for the S&P 500 with this sell-off. And if that's the case, and if Bitcoin is correlated to the S&P 500, could we assume that Bitcoin bottomed out at 33,000 US dollars, exactly as we predicted here on the Snipers channel? This was not a prediction that we put out a week ago, 2 weeks ago. This is something we've been talking about for months. And how did we come up with that prediction? Well, let's look at what's happening to the Bitcoin price. We're going to talk about Ethereum in just a second. And this is going to be extremely important, Snipers. One of the most important videos I've ever made. But we know, as I talked about yesterday, we took the two most significant points on this chart, the higher high that initially formed and the $69,000 top for Bitcoin. We took this parallel channel and we assumed that the $33,000 level was going to be the potential short-term bottom for Bitcoin. Well, is that playing out to be the case? I'm going to tell you that exactly right now. Notice how not only on the 6-hour chart, as we talked about yesterday, we saw institutional volume, but if we were to just look at this daily chart, look at how much volume we saw come in here at $33,000, right? I'm going to take this trend line. I'm just going to put it all the way down here. This is the amount of volume we saw. Have we ever seen this much buy volume since Bitcoin topped out at 69,000 US dollars? No, the last time we saw a volume of this magnitude was when Bitcoin came down to 28 and 29,000 US dollars in June and July of 2021. And so we're seeing the most amount of buy volume that we've seen come into this market, not just on the 6-hour chart, but on the daily chart at the $33,000 level. Why is that significant? Yes, it's less volume than we've seen in the past, but even the sell pressure is less volume than we've seen in the past. And so it doesn't need to be the same amount of volume. What matters is we're seeing the most amount of volume that we've seen since Bitcoin has topped out at 69,000. The only time we've seen volume of this magnitude was when Bitcoin was at 28 and 29,000, indicating to an analyst like me that institutions are accumulating at this price range. It's turnaround Tuesday. Why isn't the market crashing? We had a great Monday. That's another puzzle piece, right? I think Bitcoin right now is down to 0.32% to the upside. But notice how Ethereum down 0.2%. This is actually a huge puzzle piece that we have to talk about right now. So the Ethereum to Bitcoin chart is starting to sell off. Why is this important? Well, I've been talking about the potential that Bitcoin dominance could have triple bottomed, and we could potentially see some strength here for Bitcoin dominance. Now, if that's the case, realize this. In the past, we've seen strength for Bitcoin dominance when the overall market has slowed down, and we've seen the altcoins potentially start moving back into Bitcoin in order to hedge downside, because Bitcoin has a larger market cap and it will see less downside. And so what typically happens is when Bitcoin starts to move sideways and Bitcoin dominance is moving up, what happens is when Bitcoin starts to move up, altcoins will move up with it. But then when Bitcoin sees the downside, altcoins sell off harder than Bitcoin. And so the question is Ethereum the play right now alongside Bitcoin as it has been in the past? Well, here's a puzzle piece the bears might want to eat up, and that's the fact that we actually are not seeing institutional volume on Ethereum the way we're seeing with the S&P 500 and with Bitcoin. The two stronger assets, we're not seeing it with Ethereum. Notice on the daily chart, we're not seeing the exuberant amount of volume that we're seeing with Bitcoin. On the 6-hour we did, but not on the daily, which is a huge puzzle piece because we know that Ethereum's a more volatile asset. And so the question is, with Ethereum inside of this extremely large range with a support of 1980 and a resistance of 3454, are we going to be seeing more volatility for Ethereum than Bitcoin? That's certainly possibly going to be the case. But right now, it seems like Bitcoin is the safer play. And notice how with Bitcoin, I'm going to actually complete this analysis on the 4-hour chart for you guys, because this is extremely important. Aside from the inverse head and shoulder pattern, we are right now playing inside of the ranges we talked about yesterday with a support of 34,780 and a resistance of 36,500. Now, what's most important for Bitcoin right now is not to break above 38,000, but to stay above 34,788. Why is that the case? Well, as we talked about yesterday, every time we came below 34,788, if we look at what happened on the micro time frames, notice how we saw institutional accumulation below 34,788 every time we came below this level. So I accidentally removed that horizontal line there. We'll go ahead and put it right back. 34,788 being the most important level. It's funny, I watched this Cointelegraph interview with an analyst and they were like, yeah, 34,788 is the most important support, and 36,500 is also very important, and 38,000. I'm like, is this guy watching the Snipers channel? So far, we've been exactly on the dot with this $33,000 short-term price action as the potential bottom. We predicted that weeks ago. And so notice how every time we came below 34,708, the first time we saw a spike of institutional buy pressure. And then the second time when the S&P 500 and the Trick Trap Frustrate crew came in and started selling off the S&P 500 and we had a prolonged period of time below 34,708, we had so much volume come in that it was able to imprint institutional volume, not just on the 6-hour chart, but now confirmed on the daily chart, more volume than we've ever seen for the Bitcoin price since we came down to 29,000 in June and July. And so 36,500 is also an extremely important level, just to keep that in mind. the fact that we stay above 36,500 shows more strength than weakness for Bitcoin. And if you look at this inverse head and shoulder pattern as well, we're also seeing more strength than weakness, because if we were to take just the neckline here, at least the resistance of the neckline here, notice how we are sort of staying above it. We're not even coming to test it. Like we did come and test it here. We formed the head of the inverse head and shoulder, but now we're seeing so much strength that it's not even wanting to get back down towards this neckline. So in the short term, it does look like we're seeing some strength. The most important thing right now is, number one, we stay above 34,788, of course, and if we stay above 36,500, it's even more bullish. A break above 38,000, my first target is 41,950. Why is it important that we get there, right? Because a lot of you guys might not be too excited that we get to 41,950, but it's important that we get there because that takes us away from the $34,000 level. And if that's the case, 33,000 could potentially be the lowest price Bitcoin will ever see until we start to see a continuation in the bull market, maybe Q2, Q3 of 2022. And so 41,950 and that accomplishment of moving above 38,000 to 41,950 gives Bitcoin room to move sideways for, extended period of time, maybe a couple months, and stay above 34,000. And that would be the best case scenario for Bitcoin right now, to not see any further downside. And so for those that took our long position on the Discord around the $35,000 level, congratulations. We already hit our first target on that. I certainly dollar cost average positions into Bitcoin with this dip. And so what about Ethereum, right? As I've been talking about before, we have to be a little bit more cautious with altcoins, especially Ethereum, because of what's happening to the Ethereum to Bitcoin chart in the sell-off. We're seeing Bitcoin dominance. Notice here, if we were to just look at what's happening on the daily chart, this is important to note that we are currently testing this 100-day moving average right now, but more importantly, we are above the 20-week moving average. And so this is going to be something to monitor. I don't necessarily think that we're going to see a strong rally for Bitcoin dominance right now. And the reason I say that is because this market's a very different market than 2017-18. Bitcoin dominance did rally with the DXY back towards its 200-week moving average in 2017-18, but it was because there weren't as many fundamentally sound projects in the cryptocurrency market. DeFi wasn't as big. There wasn't much GameFi. There also wasn't much NFTs. And so now we're seeing a whole different Web3 wave come in. And so Bitcoin dominance did decouple away from the DXY. That is something that we've confirmed, not just us here on the Cyber channel, but many analysts have confirmed that. And so that decoupling effect is a little bit of a unknown puzzle piece right now with the Bitcoin dominance chart. But in the past, when Bitcoin dominance has moved up, it's either been at a time that the total market cap has sort of moved to the side, or has actually seen downside. And so the other time that this happened was in June and July of 2018, when Bitcoin dominance initially started to move up. And what happened to the total market cap is that we decided to move sideways for quite some time. And so this is something to note. And another thing that we looked at the other day was with the moving average convergence divergence on the monthly, the MACD for Bitcoin. It has just flipped red, and it's had a crossover with its short-term and long-term moving averages. And what happened before in 2018, when that happened in June and July, is Bitcoin did move to the side, stayed below $9,000, stayed above $5,000, and at some point it did capitulate, entered an accumulation zone. But it took months for that to happen. It was able to actually move to the side quite well, which is a great thing. That's never a bad thing, right? Sometimes institutions want a little bit of the interest to kind of fade away so that they can get some better positions with their volume, right? And so very interesting time right now for Bitcoin. And just to wrap up, we know what's happening right now is extremely important with the S&P 500. We're seeing a potential bottom with the VIX, but notice how ARK's innovation ETF also seeing the most amount of volume that we've ever seen on the daily chart, buying this dip below the 200-week moving average. Why is this important? Well, this is validation that after 2020, we have to realize that the world has shifted towards technology in a faster pace than it's ever done in the history of the world. And that right now is not going to change. This is the first major sell-off that we're seeing in the S&P 500. So over a 12% sell-off, already entering corrective zones. The first major sell-off for the ARK Innovation ETF, which was the top performing ETF in 2020 because they had the best predictions as to where the world was heading in the aspects of technology. Kathy Woods being a big advocate of Bitcoin, of course. And so this is the first time we're seeing a real sell-off since that confirmation of tech moving forward. And so it's the first time the innovation ETF is at the 200-week moving average since March of 2020. So we're certainly seeing a massive sell-off right now. And what does Warren Buffett always say? Buy the fear, sell the greed. With the VIX topping out and with a controlled market by the Feds, the VIX hitting a major resistance for the fourth time. Are we seeing the bottom here for traditional markets and Bitcoin? That's certainly the case. I'd love to hear your guys' thoughts in the comments below. Remember to smash the like button for the YouTube algorithm snipers. If you appreciate this content, I'd love to hear what more you guys want from these type of short updates in the comments below as well. I appreciate each and every one of you snipers tuning into the channel. I couldn't do this without you. And with that being said, I think we've covered everything I wanted to cover today. And until next time, snipers.